Session on GST year-end finalization and audit readiness for the financial year 25-26. The session will be presented by CA Ishan Tulsian, partner, R.Tulsian and Company LLP Chartered Accountants.
Hello. Hello. Good afternoon. Is my voice audible? Yes. Thank you, everyone. I would like to extend my heartfelt gratitude to Bengal Chamber of Commerce and Industry, to Vivek Jalanji, the chairperson of Fiscal Committee and Taxation Committee here at BCC&I, also to the entire BCC&I team for having me here to discuss a very important topic today, which is the year-end finalization and audit readiness from the GST point of view for financial year 25-26. Usually I've made a very exhaustive presentation of close to 200 slides. I'll share that with the BCC&I team. They'll share it with you. So usually I have a 2-hour session, 2.5-hour session. I'll try to summarize all of that, touch important, important vulnerable or focus areas in this 40-45 minute session. Okay, we may take question and answer later, in the last 5 to 10 minutes. Okay, without further ado, I would like to begin. So year-end review for financial year 25-26. Now, first of all, what do we see as accountants, chartered accountants, tax team, year of companies? There are two screens, right? What do we see? We need to do first output tax liability or outward supplies reconciliation. We are aware of that, right? Now, what types of reconciliations we need to ensure as an accountant or as a tax team or expert of our company? Today, standing on 21st of May, we may be having tax audits, statutory audits, ongoing now or maybe happening a bit later. Perhaps then later, in the month of October and November, we'll be having our last October GSTR 3B and 1 filing. Then we will be having our annual GST returns. Before that, we need to touch base on all these points. Okay. So first, let us understand book versus GSTR 3B and GSTR 1. We are aware of this. We are aware of this, right? Nowadays we use softwares, right? KDK software, ClearTax software. We use Excel sheets also. That is outward supplies reconciliation or output tax liability reconciliation. But what we've reported in our GSTR 1 versus GSTR 3B and versus our books of accounts, right? In case if there is any discrepancy, which we can see here, what is the last date to make a rectification of such discrepancy? Can anyone tell me from the crowd for 25-26? 30th of November, very good. 30th of November 2026. So we still have how many months of GSTR 1 and 3B return? 6-7 months left, right? So we should be adept with this reconciliation. In fact, this should already have been done before we would have filed our March GSTR 3B and 1. Now let's go to the other reconciliation, that is e-way bill reconciliation. What is e-way bill reconciliation? We may be aware of this kind of a discrepancy notice. This is an attachment to ASMT 10. Has anyone heard of ASMT 10? Section 61, scrutiny of notices, GST. This is a live for a client. This is a client notice, an attachment to ASMT 10. What does it say? This is mathematical differences. They are saying, what is the output tax liability as per our e-way bill data. What is our e-way bill data? We know e-way bill portal, whenever we have to, above certain thresholds, if we are making outward supplies of goods, we need to generate a way bill, right? So this way bill data is readily available to the department, to us. We need to either download all of that data from a Waybill portal. See, this is a notice wherein what is mentioned? Output tax liability as per Waybill data. If you were to see, IGST is 35,83,489. What have you paid in your GSTR 3B? 35,32,254. As per the department, for this particular financial year, you have underpaid output tax liability to the extent of 51,026.26. This I'm not saying. This you have not prepared now. This the department is preparing 2-3 years later, after the year closure. Now what do you have to do? Why to wait until 2-3 years later? Why not such a reconciliation now? So what do? We make a reconciliation statement. It's as simple as that. What is the reconciliation statement? Reaching from point A to point B. What is point A? Output tax liability as per Waybill on top. Output tax liability as per 3B at the bottom. In between reconciliations we need to make. Is there any Waybill on supply of service? Of course not. It's intangible. So we are going to add it to the e-way bill output tax liability because that sale is available in our GSTR 3B. But it's not available in our Waybill portal, right? What is the second? What possibly can be? Any sales which we have made for which the invoice value is under 1 lakh, interest rate, 50,000 interest rate, right? So we are going to make this reconciliation statement when? 2-3 years later, when the notice comes out. No, today is what I'm saying. This is the second reconciliation, extremely important. What is the third reconciliation? E-invoice reconciliation. What is e-invoice reconciliation? Are we aware that we need to create e-invoice if our business has annual aggregate turnover, means export, exempt, domestic, everything together, more than 5 crores in any of the preceding financial years, starting from 17-18 till now? In case if we don't do that, what happens? What happens? Is there any penalty on us as suppliers? Yes, there's a penalty. What's the penalty? Under Rule 48, Sub-Rule 5, 10,000 rupees or 100% of the tax in our sale invoice, per invoice. And what is the second ramification? Your recipient, your buyer, will he get the credit? Is it a valid invoice? No, he won't. So there is double whammy. Now what are you going to do standing today? We are going to download our e-invoice data from where? GSTR1 dashboard. When we go to GSTR1 on our GST portal, there is e-invoice data. We can download that, right? Download that, ensure there is a unique IRN 64-digit alphanumeric number and QR code for each invoice, right? And ensure that each and every invoice has an e-invoice. Now, can you tell, can anyone tell me the 30-day limit for e-invoice, which has started from April 25? For businesses having more than 5 crores or 10 crores turnover, what? 5 or 10? 5 crores is eligible, obligation to create e-invoice. But within 30 days, it's still 10 CR, right? So if your annual aggregate turnover is more than 10 CR, within 30 days from the date of invoice, you have to create e-invoice. If you don't do so, what will happen? You will have to nullify that invoice, create it, later on, right? And you would have to notify the department because there would be a difference in your invoice number. E-way bill is tagged with some other invoice which you have nullified now, right? So these invoices, these reconciliations you would require to do. What is the next reconciliation? We were just talking about Income Tax Act, we were talking about Form 26AS, Annual Information Statement, Tax Information Statement, AIS, TIS. Is there any integration of sales, output tax liability, purchases, input tax credit between Income Tax Department and GST Department? Is there integration? Yes. That's why we keep receiving notices from the Income Tax Department in case if there is any fraud or fake invoice case, right? So what's happening? We need to make a reconciliation or ensure that the turnover, which is mentioned in our AI, this is an AIS statement of a client of ours, wherein the turnover is mentioned as 5 crore 32 lakhs 57,491. This is as per GSTR 1 or 3B? As per 3B. This needs to match with what? Your statement, GSTR 3B statement, which you have filed in your GSTR 3B return for 25-26. If this does not match, there may be notices from both the sides. What's the next reconciliation? GSTR 1 versus 3B versus GSTR 7. Can anyone tell me what is GSTR 7? Do we file it or government departments file it? Government departments, very good. If we are government contractors, if our taxable value is more than 2.5 lakh rupees, what happens? That the government, before making the payment, deducts 2% TDS under section 51. What do? They need to file GSTR 7 within the 10th of the next month. And this appears, then what happens? We need to accept this TDS, right? TDS credit on our GST portal. Then an automated GSTR 7A TDS statement is generated. What is the reconciliation which we need to do? Consider the invoices of 26-27. My invoice, I am the government contractor to the government. Government will deduct TDS 2% and will, for instance, upload it in 26-27. When have you accepted it? 26-27. So prima facie, when in your electronic cash ledger, the 2% will reflect in 26-27. Prima facie, it will look like a sale from you in 26-27. If a notice comes, so you need to be in a position to prove to the department that, sir, this to sale is not of 26-27. I've accepted the TDS in 26-27. Sale is of 25-26. So you need to ensure that the outward sale from the government contractor to the government has been reported in GSTR 1 and 3B in the correct year, even though the acceptance of the TDS credit may be in the subsequent year. This reconciliation needs to be done. Also, we need to ensure many times across forums when we talk, one government department I have billed, another government department has deducted my TDS, third government department has deposited it in GSTR 7. Has anyone faced any such issue? Many people do so. So what happens? There is no reconciliation difference of your sale, right? Because you are getting the electronic, the 2% credit in your electronic cash ledger, but your form GSTR 7A, your TDS statement will have the GSTN of the deductor to be some other person, some other government department, which is different from the recipient on your sale bill. So that reconciliation you need to do today. Goods in transit. What do we need to do? Goods in transit, can we claim input tax credit on goods in transit? What is goods in transit? Has it reached our principal or additional places of business? No. Can we claim it? Like for example, every month our purchase bill from the 25th of the month, for example, 25th of May to 31st of May, goods actually reach on 4th of June. Can I claim it in the input tax credit in May or in June? In June, right? Section 16, subsection 2, clause B. So what is happening? These are some audit observations of certain clients of ours, wherein it is mentioned that the goods started here. The goods, the purchase invoice date is later half of the your month, which is from 24th onwards. The goods actually received or the e-way bill expiry was in the next month. Now what happens when the goods are in transit? So in case if you don't have your consignment note, you don't have your GRN, goods receipt note, you don't have your delivery challans, you don't have your store register, you don't have any evidence that the goods have actually received in the month of the purchase bill. So later on, 2-3 years later, what happens? The department catches you and issues a particular audit observation like this. So what is the crux of the matter? That today, for all the invoices from the later half of the month, your purchase invoices, 20th to 30th, kindly ensure you have the weighbridge, your slips, you have your consignment notes, delivery challans, material receipt note, good receipt note, proper documentation in your store register to ensure and prove to the department later on that these goods which may have generated from later part of the month have actually reached in that month. In case not, then the predicament will be this: 1 month interest for early claiming of input tax credit. I should have claimed it in June, I claimed it in May. So the department, what is the maximum exposure? 1 month early claiming interest, input tax credit, right? Now, another point or audit observation here, what is there? That the truck or the vehicle number has not crossed a particular toll. As per their intelligence, they've tracked, it's coming, the goods are coming from, for example, Jharkhand. But few tolls, it has not crossed. They have the intelligence and they say that kindly prove to us. What, when? 3 years later, 4 years later. Do we keep documents? We should keep documents, right? In GST, up to when? 6 years, right? Or from the end of the particular due date of the financial, your GST and 99C, or 1 year after the closure of the particular case. So 3-4 years later, when the audit happens, what do we need to prove to the department? That the goods actually received, as I mentioned, these section 16 subsection 2 clause B. This is the most litigated point for your GST, GStat, commissioner at the commissioner appeals level also. They are not giving relief for these kind of cases, that the goods have actually not received, or the supplier is fake, or due to some reason the invoice is fake. So here what do we need to do? We need to have vehicle logs. We need to have e-way bills. What is vehicle logs? We may even go on to extend to download the RC status or certificate from Parivahan website of the truck which is impugned and saying it does not exist or does not have a route permit. We need to have e-way bills. We need to have weighbridge certificates to ensure that the supplier has actually weighed the goods from there and he sent it here. Before we take it in our godown, there should be another weighment certificate. Don't tear it. Kata slip needs to be there. There needs to be freight payments if we are making payment to the transporter. So they need to be there. These are all circumstantial evidences which we need to keep in case if any dispute comes later that some vehicle did not cross this toll, or some supplier has retrospectively cancelled his GSTN. We are seeing, right, our suppliers retrospectively their GSTN is being cancelled. So in that particular case, they are saying kindly reverse all the input tax credit against all the purchases made from the supplier from the beginning of time. So we need to prove that the goods have actually received us. It does not matter if he is never existent. We should have the documents and data. So here we should also have the bank statements, right? The bank transactions making the payment to the supplier, to the transporter. Also, if we have bought goods, we have manufactured it, we need to have manufacturing entries. We need to have inventory log. If we are selling it as a trader, we need to have consequential data for the outward also, right? So all of these things are very important. Today, not during the litigation time, today we should ensure that all of these documentation is there. Our internal controls are robust to the extent that we have from the point of PO till the point of receipt of goods from our, receipt of money from our customers. We should have each and every trail. If you are a manufacturer or a merchant trader, does not matter, right? Now, next, reconciliation, physical stock versus book stocks. Unfortunately, has anyone unfortunately experienced any INS 01 inspection at their business premises? Means GST inspection. Anti-evasion or DGGI comes in, they say that, oh, we have got intelligence that you have purchased goods from some supplier who is fake or who's a fraud. Or if they come and they do stock counting. What is stock counting? Here. This is a release letter of seized goods from a client of ours, wherein the DGGR and the anti-evasion, they came in and they started doing stock counting of the raw materials, finished goods, as on that date of the inspection, 18th of March 2025. And what did they start doing? They started doing this. That goods or finished goods or raw material as per your books of accounts versus what is there physically available. If there is a difference, if you were to see what I've marked here, the first column here, number of goods as per books, it's 49, 41 plus 8. And what is the number of finished goods which are found? 51. So this means manufacturing entries to the extent of 2 finished goods has not been passed as on the date of the inspection. Can it lead to a problem for you? Yes, it can lead to confiscation in case if they have information prior hand that you have secreted some place, some information or some goods basically. So what is the crux here? Today, standing as an accountant, we need to ensure that our physical stocks of raw materials, WIP, finished goods, all of that is matched with our book stock, at least as on the end of the financial year. On every day, or at least once in 2 days, we should have the proper internal control to update our books of accounts, maybe Tally, SAP, or whatever that is, with our stocks which are there in our production floor or whatever we bought. Otherwise, they can confiscate it. Okay, advance, receipt and adjusted. This is also one important point which we should all focus. As Vivek ji had mentioned about something about advance and GST. Are we aware that is there any GST applicability on advance received against supply of goods? No. This has been removed from 15th of November 2017, notification 66 2017, right? Now, we need to pay GST against advance, for advance against the supply of services. We are aware of that, right? But so many businesses I see, when we do audit, we see there is a mistake. What's happening when you receive advance of 20,000 plus GST in the month of May, for instance? Many people, what is happening during audits later on, 2-3 years later, the department is taking the bank statement. They are seeing supply vacha in the particular ledger of the customer, the date of supply or the invoice date is June. Acha, but some amount related to this particular customer has come in the month of March or May. So what is that? That is advance and against supply of services. So what happens? The department asks the assessee to pay the difference of interest of 1 month, means from May to June, and they ask them because this particular amount was later paid in the month of June, the advance portion, because the entire invoice value had been raised in the month of June. But the interest portion is still there. What I'm trying to say, in case if you've received an advance of 20,000 plus GST in the month of May, but you've done service and raised the invoice in the month of June, what are you going to do? Ideally, is everyone doing this? 20,000 we need to report where? In our table? In GSTR 1 where? In table 11A as unadjusted advance. And we need to report the advance amount in our GSTR 3B, right? Table 3.1A as normal, outward supply. Then next month when I issue the invoice of 1 lakh, do I pay tax again on entire 1 lakh or just on 80,000? In 80,000, right? So in GSTR 3B, I will report 80,000 only. Many people are reporting entire 1 lakh. So that's why they are paying GST on the advance portion twice. Or many people, 90% of the people, they're not paying GST early on advance receipt. So there will be an exposure of 1 month of interest or 2 months of interest. This is very important. Okay, now in case, we need to also see, in case if our supplier mistakenly mentions incorrect place of supply in his GSTR 1. My supplier of goods is in Karnataka, he sent goods to West Bengal. What is the place of supply for this transaction? West Bengal, destination of goods. Unfortunately, everything is correct. Invoice is correct, IGST has been collected. In his invoice, place of supply is mentioned as West Bengal. But while filing GSTR1, he mentions place of supply as Karnataka. What happens? This place of supply, incorrect place of supply, gets auto-populated in our GSTR2B as Karnataka. And what is mentioned there? It is mentioned place of supply outside the state, right? So ITC becomes ineligible. So today, as accountants, as tax team members, we need to open our GSTR2B, GSTR2A, and we need to see all such place of supplies, ensure vouching, proper vouching is done of the correct place of supply with the invoice. Otherwise, this may be a problem later on. Okay, now when we are doing reconciliation of sales, many times we are paying IGST when CGST, SGST is to be paid, or we are paying CGST, SGST when IGST is to be paid, right? Vice versa. So in that case, what's happening? Let's see this particular example. I was to pay tax under RCM for IGST because this amount is being shown in my GSTR2A, but I've not paid this. Under IGST, I paid 30,000 erroneously under CGST and SGST in my GSTR3B. Now when what happens? I have not done reconciliation. This has not been checked. If I check, then what is the last date that I can make this correction? That is 30th of November, right? But this is missed. What happens after 2-3 years? The department says, sir, you have to not paid IGST to the extent of 60,000. Kindly pay that. So I can still pay IGST of 60,000 even later. And I can claim a refund of 30,000 CGST, SGST, which I have paid erroneously, incorrectly, right? When can what is the time limit for filing this refund? 2 years from the date of correct payment of tax. Do I need to pay any interest? No. Interest is exempt here. There is interest exemption under section 77, under section 19, respectively, of CGST and SGST Act, right? Read with circular 165. Refund is circular 135, right? So we need to see this today in our reconciliation statement of outward supplies, that if there is any problem, why to go for refund and pay and claim and all that? Kindly rectify it under in your GSTR3B and GSTR1 before 30th of November. These are some reasons why reconciliation differences happen for outward supplies. Now, for fixed asset sale, do we have to pay charge GST or do some input tax credit calculation for fixed asset sale under GST? Yes or no? Yes. So now, for example, this is today standing. I have my pro forma balance sheet. I see in the disposal column, I have few sales. What do? I either see what is on the transaction value, what is the output tax liability of 18% or 5%, that amount, or what is the second amount? Reversal of input tax credit as per this particular rule. There are two rules. Rule 40 sub rule 2, rule 44 sub rule 6. One rule says for every quarter, I'm going to take 5 percentage points, used of input tax credit. And the other one says I will count it monthly. Let's take this example. I have purchased goods on what? 1st of July 17. When have I sold it? 10th of May 19. How many years have I used? 1 year, 10 months, 10 days. As per rule number 40 sub rule 2. How many quarters are there? Can anyone tell me? How many quarters are there? Part of the quarter is also a quarter. 1 year, 10 months, 10 days. 1 year, 4 quarter, 10 months. How many? Right? So 8 quarters. Now, what are they saying? 8 quarters into 5%. That is 40% is used. Fine. What is the input tax credit? 36,000 when we had purchased. Now, how much do we have to reverse? 60%. Remaining 60%. That is the unused portion. So, 36,000, 60% is 22,050. What's the other rule? It takes monthly. How many months? 1 year, 10 months, 10 days is 23 months. I've used 37 months, not used. The useful life of asset is 5 years. We are aware, right? Under GST. So 37 months pro rata of input tax credit, 36,000. I need to reverse today. Higher of the two. What is higher of the two? Higher of, if I've sold it today, I've sold it at 22,050 output tax liability on the transaction value. So output tax liability on the transaction value or input tax credit computation year, whichever is higher. Right? This is very important. So when we see on the credit side of our PL, profit on the sale of fixed asset, debit side we see loss on the sale of fixed asset. We need to not just rely on the financial estimates or the financial calculations. We need to recompute under the valuation rules under GST. Motor vehicle sales. Are we aware of this? Is it the same? No, it's the margin method, very easy. What is the margin method? I'm selling it at 6 lakhs, second-hand car. My WDV under Income Tax Act, not Companies Act, Income Tax Act, as per book is 4 lakhs. 2 lakh margin, profit. I will pay 18%. That is my, what is my transaction value? 2 lakhs, 18%. Now, if you have a Mercedes or a Santro, what is the percentage? 18%. Earlier, there was a difference, 12% and 18. Last year, January, this got changed, right? Now, if you're selling the car below the WDV, as per Income Tax Act, that's a loss. So, as per margin method, no GST. You need to see this, all these computations today, right? Now, this only happens when you have not claimed the input tax credit under the erstwhile Act Central Excise or GST. If you have claimed, then it will be under the normal method, right? Indirect incomes. Here, in case if you're a proprietor, you're having some rental incomes. It comes in your savings bank account. It's not a part of your business, but is GST applicable? Yes. Is it a part of your audited turnover? No. So I need to see in all my bank accounts, savings bank account, my business bank account, whatever earnings I'm having, the nature of it. If it is applicable to GST, this will come as a part of our GST turnover. So this is also very important. Then credits on the expenditure side. Some very smart accountants till date, what do they do? They sell goods, they have packaging charges, loading, unloading, freight charges. All those are collections as a part of assessable value, right? What do? They take those other ancillary receipts and they set it off against the expense in the debit side. They don't show it as your top line income, earning. But that is incorrect to the extent if it is not a part of your GST turnover. So you need to see that as well. Here, like what we mentioned. Job working, are we aware of this? If the inputs have not returned back within 1 year, or capital goods have not returned back within 3 years. So, it is a deemed sale from the date of sending the goods to the job worker. So, in that context, this is a real life audit observation wherein there was no ITC 04. Are we aware of ITC 04? Yes, it's a form wherein we mentioned the details of delivery challan out, delivery challan in, right? There was no job worker register. There was no delivery challans in and out. So what happened? All the input tax credit claimed in respect of all these job working invoices, they were all asked to be reversed along with applicable interest. Flip side, what can they say? You've sent the goods 1.5 years earlier. You've got it within 2 days. But where is the proof? Give me the proof. No, sir, I don't have ITC 04. Okay. I don't have your job worker register. Okay. I don't have delivery challans also. I've thrown it. Will they believe after 2-3 years that the goods have actually been received back? No. There'll be a double whammy. You won't be able to get the input tax credit on the job working invoices, as well as you may have to you may have to pay the output tax liability on deemed sales along with interest. These are real life notices. After 22nd of September, what's the residual job working rate? Can anyone tell me? Is it still 12% or 18%? 18%. Have we checked after 22nd September, is my job worker charging me 18 or still 12? There are many people, they are still charging 12, we don't know about it. And on the flip side, let's see this notice. Before 22nd of September, the audit department caught there are many job workers, they should be charging how much? 12%, but they were charging 18%. And I'm claiming 18% as input. Return back 6%. This is a big problem. So you need to know the cutoff and the rates before and after 22nd of September. These are your ITC 04. Okay, these are certain, methods, or I would say, categories of reconciliation. You can see when the slide comes to you. Now, for input tax credit, if you were to see for input tax credit, can we claim input in our GSTR 3B more than what it is in GSTR 2B? Of course not, it's illegal now. From 1st of January 2022, right? Whatever is there in our GSTR 2B, that only we can claim, right? So that we need to see a reconciliation of input tax credit as per our GSTR 2B versus our GSTR 3B, right? Now, in case if there is an ineligible input tax credit, car, motor car, vehicle repair, where do we report? We claim it in 4A5, auto-populated from 2B. But do we need to reverse it? Where? 4B? 1. That's the permanent reversal, right? Have we done all of that? We need to see that. Okay, ITC reversal as per Rule 37. Are we aware of Rule 37? What is Rule 37? Can anyone tell me? 180 days, anything clicks in your mind? Exactly. There are 3 instances. I'll show you 3 different notices. First notice, belated payment. This is a real life client notice. Person had to pay in 2021. What is the rule? 6 months from the date of the invoice, if you've not made the payment, reverse the input tax credit temporarily in the next GSTR 3B return and reclaim it once you make the payment of the value of supply along with the tax. Is there any time limit for this reclaiming? Can anyone tell me? No, of course not, any time. Rule 37, sub rule 4, right? So here what is happening? This is belated payment. What's the liability? Interest. Can they ask us to reverse the input tax credit? No, because we've already made the payment, but belated after 2 years. So we need to make the payment of interest. That is first notice. Second notice, I've not made the payment at all. Disputed creditors. Aging analysis I see as an auditor that payment has not been made as on 31st of March 2026 for more than 6 months. What do I advise, or what do you advise to your company or management? Kindly do reverse this temporarily and pay the interest if applicable. Third, written off, remission of liability. If I've written off sundry creditors, it's another income item. Do I need to still pay or reverse input tax credit? Yes, because I have still violated Rule 37 or second proviso to section 16 subsection 2. That I have not paid at all only. 180 days to is obviously, it's a different matter altogether. Rule 37A, are we aware of this? It's very important. Rule 37A, our supplier has not filed his GSTR 3B. Now this has been curtailed to a large extent. If some supplier does not file his 3B, for 6 months he's gone. For 2 months he cannot issue his waybills, right? So if any supplier has not filed his 3B, means he's not paid tax to the government. Is that a violation on your part? Yes, because you violated section 16 subsection 2 clause C. You cannot claim your input tax credit. But government allows you to claim input tax credit up to a certain extent. What does that mean? If I have a purchase bill of April 2025. Till what time can I claim, hypothetically, till what time can I claim this input tax credit before reversal? Can anyone answer this? No. I have paid to the supplier. Supplier has stuffed it in his bank account and he's not paid it to the government. So the last date before the government asks you for reversal is next year, 30th of September. The government asks you to go to your GSTR 2A. Column number 18 to see as per filter whether supplier has filed his 3B or not. If it's no, what do? You again check it in GSTR 2B for September 2026, table 5, part A. Here you see they have mentioned all of those input tax credit ineligible vis-a-vis suppliers who have not filed the 3B. This only comes in September return. So today we need to still see as auditors, as tax experts or as chartered accountants that how many suppliers have not filed their 3B. In case if I figure out up to 30th of September that these many people have not filed their GSTR 3B, my suppliers, then what do? Within 30th November, I reverse that input tax credit permanently or temporarily? Temporarily, very good, in table 4B2. Can I reclaim this after 30th November? Yes, I can reclaim this once the supplier files his GSTR 3B. But this needs to be checked. And mind it, if we miss this, there is no relief now because there is Rule 37A and there is section 41 which has come. So it's become the act, right? Are we aware of this electronic credit reversal and reclaim statement? Are we aware of this at all? This new GSTR 3B format. Everything comes in my 4A5. Then I need to reverse permanently in 4A1, 4B1 and temporarily in 4B2. Temporarily, I don't have the invoice. Goods have not reached me. What? 180 days I have not made the payment. Supplier has not filed his 3B. Right? So temporarily, if I have not got the invoice, I am temporarily reversing it. But when I reclaim it, where do I reclaim it? In table 41, 45, we know that, right? So due to this mechanism, we have the electronic credit reversal and reclaim statement. Can this be negative? What does negative mean? Negative electronic credit reversal reclaim statement means? Can anyone tell me? Means, here, let's see this slide. This is a negative amount. What does negative amount mean? I am parking certain input tax credit temporarily in my table 4B2 because everything is coming in my table 4A5 from my 2B, right? Now, goods have not reached me in the month of May. So, I put that particular input tax credit where? In table 4A5. So, I put 100 rupees as in table 4B2. In table 4B2, I put 100 rupees temporarily reversed, parked it. My opening balance is, for example, 100 rupees. What is opening balance of electronic credit reversal reclaim statement? Means if I have reversed something earlier for which I have not reclaimed yet, right? If I've reversed earlier but I've not reclaimed yet. So opening balance is 100 and in this current month I have reversed temporarily 200. Means 200 रुपया का input tax credit का worth माल मेरे पास में गोडाउन में पहुंचा नहीं मई के महीने में, और पहले में 100 रुपया मेरा और ऑलरेडी खाता में पड़ा हुआ है temporarily. So 300 rupees is my temporary reversal of input tax credit. How much can I reclaim at any point in time? Up to 300 or above 300 also? Up to 300. This is electronic credit reversal reclaim statement. If you reclaim in table 4D1 and 4A5 more than 300, the statement becomes negative. Simple concept, right? Can this be filed now if it is negative? Can GSTR 3B be filed if your electronic credit reversal reclaim statement is negative? I'm talking about today's time. Can anyone reply? It can be filed with a warning. It's not a hard stop validation right now. Why? Because it may come in the future. What will be the warning? The warning will be here. ITC reclaimed by you in 4D1 is more than ITC which is available in 4B2 plus the opening balance. But you can still file. Do we need to rectify this? Yes. This advisory came in January 2026. Very important in the next few months. We may not be able to file our GSTR 3B in case if our electronic credit reversal reclaim statement has a negative balance, which means if we have reversed 100 but we are reclaiming more than 100. So then what happens? If we don't file 3B for 2 months, what happens? Can we generate e-way bills? No. Our business will stop. So from the point of our business stopping till the point of our accounts, this is a very short way. This is extremely important. This is the most important part of my presentation. Electronic credit reversal reclaim statement as on today in the month of May for 25-26 up to filing of your March return in the month of your April or April return in the month of May. You need to see if it is negative. What do? Let's take this example. Ideal situation. What is opening balance should be 10 but mine is minus 15. This means Purana Pap. In the earlier months, I have reclaimed 25 in excess of what is available in my 4B2. So, do I need to rectify this? Yes, I need to rectify this. How do I rectify this? Today I report 25, I reverse it further in 4B2. Right? So, minus 25. It should be 10, it is minus 15. So, minus 25 of my opening balance, negative balance of electronic credit means I have reclaimed in 4D1 in earlier months more than what was the opening balance in 4B2 and the 4B2 of all the months up to this month. Simple, right? So this 25 I need to reclaim where? In 4B2. Can you see 4B2 it's 15 for this month. I need to put 25 plus 15, 40. If I put 40 here, what will be the amount in 4C? Everyone knows 4C is the amount which hits our electronic credit ledger, is what we claim. Will it take a downward turn? Yes. If 14 I'm reversing temporarily in this month to rectify Purana Pap, so in 4C, what will hit my electronic credit ledger will be 15 less of input. Right? So what will 4C be eventually? It will be 45 minus 25 means 20. Means eventually only 20 input tax credit will be credited. But what will happen? In 4B2 if I have 40. Now let's back calculate. 4B2 40 minus 15 of opening balance, it comes to how much? 40 minus 15? 25. And 20 I have reclaimed correctly in the month. What is the closing balance? 5. So, electronic credit reversal reclaim statement has become positive. And it is correct. So, what does this mean? This means in the moving months, you will have to pay out of your pocket if you don't have enough input tax credit. यहाँ पर तो बच गए 45 था 45 था ये तो 45 नहीं होता 0 होता I would have to pay out of my pocket 25 cash. This is extremely important. Similarly for RCM statement also. What is RCM statement? I paid tax under RCM. I paid tax under RCM in table 3.1D. But I paid only, for example, 10. I've claimed in 4A2, 4A3 100. So there is a negative of 90. So today what do I need to do? To proceed further with filing of 3B, I need to either reduce my input tax credit claiming to the extent of 90 or pay tax under RCM to the extent of 90 more, right? These things we need to see. There are many other slides also. You know, you can see rule 42, 43, which is reversal of input tax credit on common credit when you are having exempt supply as well as your taxable supplies. Due to paucity of time, we may not be able to go through each and every slides, but the presentation would be there with you. In case with your business income, in case if you are selling securities, so 1% of your entire sale would be considered as exempt supply, to the extent used for reversal of input tax credit under 4243. Very important. We need to have an annual true up. Every month we are computing the common credit for reversal if we are having exempt supply as well as taxable supply, but annually we need to true up. If annual reversal, annual exempt ratio is more, I need to reverse more along with interest. Very important. These are block credits. Okay, are we aware of new discounts? Circular 252, 251, you can go through this. This has come out recently only, that in case if you're just giving a normal discount, so there is no credit note which needs to be issued by the manufacturer, or there is no invoice which needs to be issued by the dealer. But if it's a payment made towards any planned advertisement activity, branding, co-branding, then there is a service element from the dealer, right? There is no input tax reversal in case of financial credit notes. All these things have been clarified. RCM, new intermediary rule. Are we aware of this? New intermediary rule. Let's see this example I put for you. From 30th of March, what's happening? Any intermediary service or any foreign commission agent, if you're taking any service, आप यहाँ से दुबई में माल भेज रहे हो, पोर्ट में दुबई में you have hired someone who is going to do the intermediary service, माल clear कराने, etc. You pay commission per whatever unit. So now what's happening? He's an intermediary, foreign intermediary. Place or supply for intermediary services, section 13 subsection 8 clause B of IGST Act, that has been removed and the default provision has come in. So service recipient will be the place of location. So I am the service recipient in Bengal. So place of supply in Bengal, foreign supplier, recipient in India. It's an import of service under section 2 clause 11 IGST Act. We need to pay RCM. We need to pay RCM and issue a self-invoice within 30 days. This is very important. And flip side, if we are intermediaries, so if we are giving services in relation to export of goods, then place of supply is not the location of the service provider anymore. It's the service recipient outside. It's an export of services. So you can go through all of these things. There are several other slides also, but of course we cannot cover all of these things. But I've tried to put in a lot of other real life notices, and I've tried to put in other specific points which need to be focused during finalization now, or discussion with your auditors, or if you are a professional, you guys can go through each and every part of this. Rule 86B, corporate guarantee and all of those things. So thank you for a very patient hearing. The floor is open for questions. In case if anyone has questions, can ask me a few questions, or we can take it later also, one-on-one. So this is my contact detail. You can connect with me otherwise also, after the session, or in case if you have any queries in the future also, please do connect with me. Thank you so much for a very patient hearing. Thank you for being such a wonderful audience. Thank you so much.
Thank you, Mr. Tulsian. I request Mr. Subroto De, Managing Partner, De Boshan Associates, and member of the Managing Committee of the Bengal Chamber of Commerce and Industry, to please be on the dais and present a memento on behalf of the Bengal Chamber.